For beginners, the stock market is a marketplace where you can buy and sell small pieces of ownership, called stocks, in publicly traded companies. Companies sell these stocks to raise money for growth, and in return, investors get the opportunity to share in the company's potential future profits. How stocks and shares work. While often used interchangeably, there is a subtle distinction between the terms stocks and shares. Shares refers to the individual units of ownership in a specific company. For instance, you could own 50 shares of Company A stocks, a broader term that refers to your entire ownership stake across one or more companies. For example, if you own 50 shares of Company A and 30 shares of Company B, you would say you own stocks in both companies, or stocks are traded. Stocks are not bought and sold directly from the issuing company after the initial offering. Instead, trades happen on stock exchanges, which are organized marketplaces that connect buyers and sellers. Stock exchanges. Examples include the New York Stock Exchange, NYSE, and NASDAQ. These exchanges use electronic systems to match the bid price, the highest price a buyer will pay, with the ask price, the lowest price a seller will accept, as primary market. The first time a company sells its stock to the public through an initial public offering, IPO. Secondary market. The stock exchanges where investors trade existing shares with one another. When you buy stock, you are typically purchasing it from another investor, not the company itself. How you can make money. As an investor, you can earn money from your stocks in two main ways. Price appreciation, capital gains. This is when the stock's price rises over time. If you sell your shares for more than you paid for them, the difference is your profit. Dividends. Some well-established companies pay out a portion of their profits to shareholders. These are typically paid quarterly and provide a source of income. What influences stock prices? Stock prices are constantly fluctuating based on supply and demand. However, many underlying factors affect that supply and demand. Company performance, strong earnings reports, profitable new products, and solid company leadership can drive prices up. Economic conditions, broader trends like interest rates, inflation, and unemployment can affect the market as a whole. Market sentiment. Overall, investor confidence or fear can cause prices to rise a bull market or fall a bear market. How to start investing. For beginners, a simple and effective approach is often recommended. Open a brokerage account. This is the account you will use to buy and sell stocks. You can open one online with a reputable brokerage firm. Fund the account, connect your bank account, and transfer the amount of money you are comfortable with. Many brokerages have no minimums to open an account. Consider funds instead of individual stocks, rather than trying to pick a single winning stock. Many beginners find success by investing in diversified funds, index funds, and ETFs. These funds track a market index like the S&P 500 and hold a wide variety of stocks. This provides instant diversification and helps reduce risk. Invest for the long term. For most people, a buy and hold strategy is the best approach. This involves consistently investing and holding onto your positions for many years, riding out any short-term ups and downs